One of the most common misconceptions when it comes to trading is that you need to have a high win rate in order to make money. However, in the last two videos, we were able to validate why this is not necessarily the case. But having a good win rate definitely has the potential to positively impact your trading returns, especially if you know how to interpret the data the right way. Hello and welcome. My name is Dean Miller from Wealth Tip, where our tip for wealth is to trade, invest, and prosper. If you're new to this channel, then go ahead and click the subscribe button as well as the notification bell. That way we can stay in contact with you and continue adding value as we journey alongside you on your way to success. Now, over the last 2 weeks, we didn't really have a lot of positive things to say around the subject of the win and loss rate. And if we were to end the series just there, then you'd be under the impression that you don't need a high win rate to find success in trading. And although the last two episodes has proven this to be true, having a medium to high win rate definitely makes the journey to success a lot easier. You see, trading is a game of the mind, and it's not you against the markets. Instead, it's you against yourself. And essentially, no matter how good you are at something, you do all you can to avoid loss at all costs. However, when it comes to trading, losses are simply just part of the process. And instead of trying to avoid it, successful traders has developed certain thinking patterns that allows them to function rationally in the midst of it. But no matter how rational you may be, to some degree, a loss has the potential to negatively affect your trading account as well as your confidence over an extended period of time. Thus, the reason for having a medium to high win rate. It's not so much for your returns, but more so for your psychology, especially when you're starting out. But as you become more and more seasoned as a trader, eventually your confidence will no longer be dependent on your win rate. Instead, it will now be dependent on your performance over time. Let me go ahead and explain this in greater detail. You see, there's a difference between winnings and profit. You can have a winning formula but still lose money. And you can have a profitable formula that makes money regardless of how many times you lose. Simply said, to be profitable, you don't always have to win, but to win, you always have to be profitable. So in order to determine if you have a statistical edge within the markets, you can use a simple formula that we call the profit factor. So the purpose of this formula is to determine if a particular trading strategy or system has the potential to be profitable over time. Now, the profit factor is calculated as a ratio, so it needs to be greater than 1.0 in order to be considered a profitable formula or a profitable plan. So the formula is as follows. It's the total sum of winning trades divided by the total sum of losing trades. Now, let's go back to Tom. Now, if you can remember last week, we saw that Tom has a winning strategy that has a win rate of only 20%, and yet he's still able to average 30% per annum. So it's clear that Tom is finding a fair amount of success using this particular approach, but Tom would like to invest a little bit more capital and perhaps even go full-time into trading. But before he can make such a commitment, he has to determine if his particular trading approach can score above 1.0. What this will prove is that Tom does in fact have a profitable formula, and he can strongly consider investing more capital into his trading account and perhaps even down the line start considering trading full-time. So let's see if Tom's approach has what it takes for him to go full-time into trading. Now, according to last week's video, Tom's total sum of winning trades was valued at $7,162.68. And his total sum of losing trades was valued at $2,162.68. So if we were to place these figures into the formula, then we'd simply divide them from one another, and what we would end up is 3.3, which is well above the required amount. So what this does in fact prove is that Tom has the strategy required in order for him to go full-time, because it does prove that he has a profitable trading strategy on his hands. And essentially this gives him the go-ahead not only to invest more money into his trading account, but also for him to go full-time down the line. So if you've been trading for a while and you're thinking of either going live or simply just wanting to invest a little bit more capital into your trading account, then you may want to do this simple calculation before making such a commitment. And if you're completely new to trading and you would like to explore this particular subject in great detail, then you can simply just click the link in the description box below and it will take you straight through to our beginner's guide course, where you will learn how to start your trading journey the right way. So for the most part, I really do hope that you've enjoyed this video and that you are enjoying the series that we're putting together for you guys. And again, if you are, then go ahead and hit the subscribe button as well as the notification bell. And we'll see you guys next week for part 4 of this series. Up until then, keep well and bye for now.